Hello friends, this is Raj Sastri from Raj Option Trading. Today is May 23rd, 2021. I want to talk about high volatility option strategies for the week of May 24th. So with that, let's jump in and look at few stocks and few ideas for high volatility option strategies. So let's jump in. So here is the list we have. So as you can see here, we got all the way from Virgin Galactic at the top to TAL Education at the bottom here. The way this chart is organized is I got the stock itself, the company, price, market cap, sales and sales acceleration or sales growth, very important, and the gross margin, also short ratio, price to sales, talks about valuation. If the price to sales is high, that means valuation is high. Then we got IV percentile. IV percentile is very important when we are looking at high volatility premium selling strategies. So that's why we got to pay very close attention to IV percentile. And then I got the RSI that tells you whether the stock is overbought, if it is say above 60 or so, and if it, is it oversold, if it is say below 40, 45. And volume, I made sure you got good amount of volume because volume is very important. As an option seller, you got to make sure volume is high so you can get in, get out as easily as possible. Then we have to look at earnings. If the earnings is around the corner, for example, QFIN here, you got to be a little bit aware of that. Typically, IV implied volatility, IV percentile is high as we approach earnings. So you got to be aware of the earnings date itself. Then we got performance 1 month, 3 month, and 1 year. 1 month and 3 month is important because it tells you, what have you done to me lately type, thought process. If in 1 month and 3 month it's going up, you can see some, good momentum there. And also very important is how far is it from 52-week high. For example, Virgin Galactic, it's 66% off from 52-week high. So that tells you, it's really stock has got more room to run. And by looking at 3 month and 1 month, you can see there is some improvement in 1 month. So also by looking at the chart, you can get a little more precise and see what's the right strategy. So with that in mind, let's take a look at a few examples here. First is Virgin Galactic SPCE. Right now the sales is zero, as you can see here. This is pure speculation, and they got some good news. Mr. Richard Branson, I think he basically has some space tourism. I think they launched a space shuttle or space vehicle, positively, successfully. So that's why stock is going up. So let's look at SPCE with the IV percentile of 52 and a RSI which is somewhere in between, which is 51, not too bad. Let's see what's the best strategy here. So with that, let's go back to Thinkorswim platform here. I would talk about SPCE here. So if you look at SPCE from a chart perspective, nice looking chart here. Stock wants to go up a little bit, as you can see here. It's above its 9-day moving average, trying to take on 25-day moving average. And I think it's trying to use 25-day moving average as a support right now, and it might go above 50-day moving average if it is successful here. And company also announced earnings back in May 10th, so that's out of the way. So that whole earnings related volatility is out of the window right now. On the balance, volume is going up, that's good. Volatility as RSI is shooting up, that means stock is gaining strength. And as you can see here, DMI perspective, the blue line is trying to go up, which is a good sign, and red line wants to come down, which is also good. And from a IV percentile, implied volatility perspective, implied volatility is going up. Now it's kind of trying to be stable at this point, which is good. And check-in money flow is indicating there is some smart money flowing into the stock. So with this setup here, with the IV percentile, being high, we could, sell some put here So we can sell some put options. To sell put options, you could go maybe say 54 days out or even 40 days out. Probably 54 days could be better. By looking at the price we can make out. So if you see here $21 right now, if you sell something at $16 or oh, this 40 days is also okay. I think 40 days is safer choice here. You could sell some at 16.5, which is 20 delta here. And if you do that, you will collect $1.07. And the buying power reduction is 173, not too bad at all. And you'll basically get $107. And if the stock keeps going up, there will be theta decay and you get to keep this money. If stock keeps going down, you get to buy the stock at this price here, $16.50, which is not a bad deal. So this is a good way to play this stock here, Virgin Galactic, and go from there. So other way to play could be, if you look at the chart here very quickly, you see that stock is going up, and as you can see here, it can, if you think stock might come up and down a little bit, you could even sell one more leg on the call side as an example. Because the IV percentile is high, you could make some money. So if we go back here on the call sides, we can look at the 40 days out as usual. Then if you look at the call side here, let's go. So as you can see, there's good money in the call side also. So you could go somewhere here 30, 35. You could basically sell this spread here, which is way out. So if you sell this spread here, there you go, you're going to get 38 cents, which is not too bad. I mean, it's not great, but it's okay. So your buying power reduction is a little high here, 289. You'll get 38 dollars. If the stocks if the stock stays within $30 by 40 days, you got to keep this $38. And you don't need to wait till the end. You can as you make profit, you can just sell this, you can buy this back also. So with that, this is a one more idea. You could do both if you want to, and this is one more idea. So with that, let's go back here to the chart here. So next is QFIN 360 DigiTech. As you see here, QFIN is $26 stock, Chinese-based fintech play, and they got nice, IV percentile 62, high enough for us. Only thing is caveat is earnings is coming around the corner, 527, and stock has been doing well in 1 month. They are 23% off of 52-week high. So for a setup like this, what you can do is really look at the chart and see how this stock has done in the past during the earnings. That will give you some idea, and then we can devise our strategy and go from there. So let's go back to Thinkorswim here. QFIN is our symbol here. And let's go to chart here and see how the stock is doing. So earnings here, stock kind of went down a little bit. Earnings, stock went down a little bit. Earnings here, stock went up and down a little bit. And now we got one more earnings. So by looking at the history of this stock, it doesn't do too much after the earnings. Looks like it will come down most of the times. As you can see, earnings went up but came down. Earnings here went up a little bit, came down. So history tells us this stock might behave same way like before. And if you look at the on the balance volume here, that's going up nicely. That's a good sign. RSI is getting some strength here. And even a DMI, I think it's showing some strength. We got a crossover. The blue line is crossing over red line. That's a good sign here, positive sign. And implied volatility, if you look at the blue line here, that's 58, pretty high. IV percentile is 61.8. And check-in money flow is showing money is flowing out of the stock a little bit. So with that setup here, we could, let's see what we can do here. So if you come here, we got 26 days and 54 days out. So if you look at 26 days here, um, the volatility is high here, 87.5, because earnings is in this, within this time frame. And if you if you look at 22.5 here, you make 55 cents here. And if you look at 22.5 here, you make a little more than that. So I think, probably for this setup here, depending on how much money you want to take in, maybe, this could be better off, 54 days could be better off. You could even, do a spread here. Let's see what we can do here. So we could sell this put outright. For example, if you just sell it, you'll collect $1.15. And with the stock showing some positive momentum, if the stock stays above 21.35, you get to keep this entire $115. um, you know so that's one way to play. You can just sell this, and you can, if the stock really goes up after the earnings, you can just buy back this put option. If it goes down, you get to buy the stock at 22.5, or you can even use other strategies like rolling up, and taking it from there. So that's one way to play. Other way to play is really you could do a spread here, 22.5, and you could even do 17.5. That will give you some good money. So with that, you could sell a spread here. So this is a, as you can see here, uh, $5 spread here, getting a good amount of money. This could be a better bet here. You could sell this. Your max, your buying power effect is 250. Your max loss is 395. You make 105. Break even is 21.45. This is another good strategy here. And because we have seen how the stock was doing after the earnings, it sometimes comes down a lot, sometimes stays flat. With that insight, if you go back to the chart here, you could kind of argue by looking at this chart here. You could argue, hey, you know what, maybe, stock may not go too high. It might stay, say, within, say, 35 type range here, or even 32 type range, because that seems to be the ceiling here. As you can see here, you could, employ another strategy here. So you could also do some, sell some call spread here. So you could do something like this here, 30, 30, 35. Let's see how much it will bring in. There you go. You are selling at 30 and buying 35. So it's a $5 wide spread. You'll bring in $1.15. And if you confirm and send here, so you'll, max profit is $115. Your break even is 31.15. You want to make sure stock stays, within, this 31.15. If it goes higher, you'll start incurring losses. But buying power effect is low. So max loss itself is 385. That's $5 wide spread, $500 minus 115 that you bring in already. So I think this is another strategy, hoping the stock will not cross 31.15. This is other strategy. You could do both ways. You could sell a call option and a put option, like a call spread and a put spread. So that way you kind of hedge your position here. That's another way to play. So with that, let's look at one or more strategies here. As we scan through this, we have some of the great stocks here. We got Silvergate. I love this stock. It's a cryptocurrency type play here. The bank, with the crypto stocks falling off, this is much stabler company than other companies like Bit Digital and Marathon. So it's a bank, real bank. So as you can see here, it's done badly in 1 month, 3 month. 1 year has done very nicely, and it's 44% off a 52-week high. And as you can see, our RSI, sorry, the IV percentile is pretty high, 63, and RSI is low 48. So this is another good play here. For the stock folks who want to buy stock, this is a good one. As as crypto is falling, this is a good stock to buy slowly. And as crypto rebounds, this will rebound very nicely. So with that, let's look at Silvergate here, SI. So if I go back to the chart here, Silvergate. So as you can see, your stock, is tethered, to the cryptocurrency. Right now, stock is trying to, go above 50-day moving average and bounce off of it. Nice on the balance volume. RSI is also like mid-range 47, and stock is bullish from a DMI perspective. We have a crossover. The blue line is crossing over the red line, which is a good sign. And implied wall, I think it came down a little bit, but still IV percentile is high. And check-in money flow is indicating money is flowing out, but not too much, a little bit. So with this, we could employ some similar strategy here. If we go to Silvergate, there is a 26-day out, there is a 54-day out. I think this is good enough for us. So as you can see here, we got very good premium here. If you sell a 50, 60 put option here, you will bring in $1.25. That's a good deal. You could just do this way. So only problem is, the buying power effect is 617 right now. But if the stock starts falling down for some reason, you could have a more and more buying power effect. So that way, you will end up, if you don't have enough money, you'll end up putting more money, or you'll get margin call. So if you're not concerned, if you have enough money to cover this entire amount here, which is $6,000, then it's not a big deal for you. But if you don't want to incur too much buying power effect as the stock falls off, you could also do one more strategy here. You could do a spread. You could do 60-50 spread, or even 65 60 65-55 spread. That could be a better idea. If you do that, so you'll bring in 95 cents, which is not bad. But your buying power effect will stay at 755. It will not go too drastically higher. You're bringing in 95 cents. It's a $10 wide spread, as you can see here. So your buying power effect will kind of will not go too high. So I think this is a little bit conservative play. So if we confirm and send, you'll bring in $95. Your break even is stock stays above $64, which might very well be the case. Stock, chart seems to indicate it's a pretty stable, even at a higher price levels. So that's one way to play. And you could also, by looking at the chart here, if I go back to the chart, so stock is trying to go up. As you can see here, stock has gone up. I think this somewhere around 186 seems to be the ceiling here for the stock, or even 177. So you could even try to see if there's a call premium you can bring in by selling call spread. So if you look at all the way here, I think 150, 160, I think it goes all the way to 150. You could even sell, this spread here and see how much money you'll get. There you go. So if you sell this spread, you'll get 55 cents. It's not a big amount, but if you want to widen it out a little bit, you could even do 150 and 140. There you go. This is not a good idea. So we are selling 150, we are buying 140. Okay, that's okay. So let's stick to 150 and 145. So you'll delete. So we'll sell this spread here. There you go. We'll bring in 55 cents. We are selling 150 and buying back 150. We are buying back 155. If you want to bring in more money, you could increase it. Instead of 150, you could do 145. So if you do that, you'll get in $1.15. You'll do $10 wide spread. So if you confirm and send here, if the stock if the stock stays below 146 in 45, 54 days, you'll get to keep this entire money. This is the other way to play. So you could do both ways if you want, and take it from there. So you could make money that way. So let's go back here. You got a couple more stocks here. As you scan through this, I will not go through everything. You can just go through them. So as you scan through this high volatility perspective, one of the high volatility here is Edward Life Sciences. As you can see, 63. Then as you scan through, we got two more here, Nutanix and Alkermes. And if you look at even this one, apps digital turbine has a high volatility, so and low RSI. Its earnings is coming. That's the reason. And I think we got here Anaplan. Anaplan has got a good IV percentile, and earnings is coming around the corner. Let's look at Anaplan and see what's in store for Anaplan. That's a great company. CEO Frank Calderoni, he's a great guy. Let's go back here. As you can see here, stock is kind of sort of, earnings here, stock came down, earnings here, stock went up, earnings here, stock was kind of muted before the earnings, stock gapped up. So right now, as you can see here, after the earnings, stock is kind of, I think it's in a neutral range here, trying to go up slowly. So there may be a chance, this stock, might stay above. There is some bullish sign, as you can see here, on the balance volume is going up, and RSI is trying to go up here, and DMI chart is trying to, the blue line is trying to cross over red line, which is a good sign. The implied wall itself is kind of flat here, nice IV percentile here, and check-in money flow is indicating money is flowing in. From a chart perspective, it shows some bullishness here. It's trying to bounce off of 25-day moving average. I think there is some bullishness to this stock at this point. We can go, and if you look at all-time high, $86, and as you can see here, this could be a good support level. So 62, 63 could be a good support level for this stock. I will go back and see what strategy we can do here. Plan, I think we could do same thing, 54 days out. We could stock is at 56. You could even sell a 47.5 put here. You'll bring in $1.30. You could confirm and send. If the stock stays above 46.20, you'll get to break even. So if the stock goes up above this price here, 47.5, you get to keep your entire money. So you don't need to wait till till 16th of July. If the stock goes up after the earnings, you could buy back your put option, make money that way. If you don't want to sell put option outright, you could even do a put spread here. You could do even 47.5, 37.5, or even 47.5, 40. That will bring in good $1. That could be another way to play. So for that, you could just sell a put spread here, 47.5, and you'll buy back 40. There you go, 105. This is good enough. You could just confirm and send. You'll bring in 105, and max loss is 645 because it's a $10 wide spread. Don't be alarmed with the these type of spreads here. Typically, when you sell premium, you get to the buying power effect is typically a little bit higher, which is because probability of this succeeding is a little higher. That's why. So I think it's a okay play. You could sell this one and take it from there. And if you want to play the other side, you could do also. As you look through this here on the call side, stock is at 56. As you scan through this, there is good amount of money here. at 70. You could even try to do this 65 70, see how much you'll get. There you go, 85 cents credit. Not a bad idea. You could also confirm and send this. Your buying power effect is 415. You'll bring in $85. If the stock stays below 65, you get to keep your entire money. If the stock goes above 65.85, that's when you'll start incurring some losses. Your max loss is 415. This is the other way to play on the on the call side, getting some premium. So with that, let's go back here to the chart. As you can see here, there are a few more. We'll not go through all of them in detail. Oh, I see. There is one here, Vertex. Vertex has got very good premium also. Vertex Pharmaceuticals. Um, yeah, that has got a good premium, and earnings is coming later, 729. So that's a good one. And even Southern Copper, I think it's got a high IV percentile. Let's look at Southern Cop and see what's in store for Southern Cop. So as we see here, stock, I think earnings was back in 428. Oh, is earnings coming around the corner? Yeah, 727. It's maybe a couple 2 months out. So if you look at this on the balance volume is pretty okay. RSI is down 41. A little bit bearish at this point. Copper is plunging at this point. That's why it's a little bit bearish right now. And IV percentile, IV is going up, as you can see here, blue line, and smart money is flowing out. So with this, with the high IV percentile, as you can see here, there is around 62. There may be some good support here. Um, 60 could be a good support point. I think all the way here it was 60. So we could look at some strategy here. 60 on the lower side, and on the higher side it's around 82 or something along those lines. So if you go back here, 54 days out is good. So 55, if you want to sell put option at 65, you could do that. You could just get 70 cents here, which is $70. Buying per effect is 557. That's one way to play. Because we saw 60 is the support level, you could even sell a 60 put option will bring in $1.45. This is a little bit good premium here. But if you don't want to take, if you're a little bit risk averse, you could even sell some put spread. You could do 60-50. That will also bring in good amount of money. There you go, $1.10. That's not bad. So you could do something along these lines. And you could also sell something on the put side, call side. So as you scan through this, $69, 70, almost $70 stock. So around 80, 85, you could do this one here. Could sell this spread right here. So 80-85 spread, if you sell this, you'll get 60 cents credit. And if you want to even go 70, 75 could be too risky. I think this is good enough. So you'll get 60 cents credit, which is $60. Your max loss is 440, and buying power effect is also 440. This is another way to play. So with that, going back to our chart here, here we got other ideas. You can just go through them, casually and see. Especially pay attention to when the IV percentile is high. When IV percentile is high, and if RSI is a little low, then look at selling basically selling put options and get some premium. But if the RSI is also high, in addition to IV percentile being high, that tells you the stock is kind of overbought, and you could sell some call premiums in the scenario on the higher side. So with that, thank you very much. Happy investing and trading. Please subscribe.